the WeWork IPO got pulled. Airbnb reportedly looking for a direct listing, which I guess supposedly, would what?
Well, the venture capitalists love this new model, the direct listing model. And after we had two of them, we had Slack, we had Spotify. Slack was much smoother than Spotify. So there's this great hope that Airbnb, which turns a profit, which has a big brand name, can do this a little bit better next year.
But wait a minute. So it was not a smooth process for either one of them. I mean, and the end result was that, you know, both of those companies you mentioned, I mean, they're trading down. I mean, Slack's down about 13-14%, and I believe Spotify, since that 18 IPO, down about 15%.
So let's definitely differentiate between the IPO at the moment in time, right?
Okay.
The bankers and the company's IPO are only responsible for the night before, really that day, maybe the lockup period. Spotify, you're right, it did trade down on the first day. First day. Slack, however, they were able to keep the price very stable. In fact, the New York Stock Exchange had said it was one of the biggest volumes traded that for a listing that big. And so a lot of volumes were traded on the first day, which is very interesting because you don't know what you're going to get in a direct listing, right? The market chooses the minute really you go public. You don't have bankers selling stock the night before.
And is this the reason, the lack of bankers? And the lack of fees? Is that why venture capitalists like it so much? I mean, there's also, of course, this is a niche element to a certain extent that it's got to be working for companies that don't need to raise more funds. So a direct listing tends to be just on those sorts of areas. But why else do these VCs that are all gathered together discussing this currently in San Francisco, as you report, why do they like it so much?
They like it because they don't like the IPO pop. Remember, not every investor feels that way. If you are one of those prime investors that get to buy into an IPO and you're used to that 15% pop, you used to love the IPO model. But the venture capitalists really want to get the highest possible price immediately. And remember, actually, it's not all banks that lose out from this. Goldman and Morgan Stanley worked on the direct listings. And so it is lesser fees, but it's a fewer amount of banks sharing those fees. And so the people that do work on it tend to cash out pretty well.